You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Friday, 17th day of January, 2025. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the day. We do two every trading day. One is private, one is public. The private broadcast, which runs from 9:30 a.m. to 11:30 a.m. Eastern, that's our live training room. That's reserved for members only and those who are taking the 1-week free trial. If you haven't taken your 1-week free trial, when Michael comes on in a bit, he'll show you step by step how you go about doing it. We'll get you indicators indicating today, and Monday is a holiday, so you'll get all of next week and then the first day of the following week. We always make sure you get 5 consecutive trading days. Now, when the live training room ends each day, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which, as I said, is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down to where it says noon broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. Now, the benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. It's really easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting if you will, but we also archive each and every daily broadcast. Currently, there are over 2,700 daily episodes archived for your educational and viewing pleasure. youtube.com/CFRN. Our daily schedule each day is right here. So we're going to jump into our daily devotional. We're starting a new topic today, winning the war in your mind. And so we'll be on this topic for 7 days. Our scripture today is Philippians 4, verses 8 through 9. And I'm going to share it with you from the Message translation. Summing it all up, friends, I'd say you'll do best by filling your minds and meditating on things true, noble, reputable, authentic, compelling, gracious, the best, not the worst, the beautiful, not the ugly, things to praise, not to curse. Put into practice what you've learned from me, what you've heard and saw and realized. Do that, and God, who makes everything work together, will work you into his most excellent harmonies. Now, of course, that's Paul writing to the church at Philippi. Philippians 4, verses 8 through 9. Winning the war in your mind. Our lives are always moving in the direction of our strongest thoughts. What we think shapes who we are. You might hear that and think I'm being overly dramatic, using hyperbole to get your attention, but there's no exaggeration here. Our lives do follow the direction of our thoughts. The better we grasp that truth, the better equipped we'll be to change the trajectory of our lives. But don't take my word for it. Both the Bible and modern science provide evidence that this is true. So, over the next 7 days, we'll unpack both Scripture and what we've learned from scientific research. Here's a brief example of both. In Philippians 4, the scripture we just read, the Apostle Paul writes, "Finally, brothers and sisters, whatever is true, whatever is noble, whatever is right, whatever is pure, whatever is lovely, whatever is admirable, if anything is excellent or praiseworthy, think about such things. Whatever you have learned or received or heard from me or seen in me, put it into practice, and the God of peace will be with you." Same scripture, different translation, makes the same point. Now, in these 3 sentences, Paul moves from thought, where he says, think about such things, to action, put it into practice, to experience. The God of peace will be with you. Paul tells us that our thoughts shape our lives. In recent years, an entire discipline of modern psychology has developed called cognitive behavioral therapy. This breakthrough teaching reveals that many problems, from eating disorders to relational challenges, addictions, and even some forms of depression and anxiety, are rooted in faulty and negative patterns of thinking. Treating those problems begins with changing the thinking. I don't know about you, but when the Bible and modern psychology say the same thing, that gets my interest. I want to know a little bit more. What science is demonstrating today is what God told us through Solomon almost 3,000 years ago. In Proverbs 23:7, we read, "For as he thinks in his heart, so is he." So if both the Bible and modern science teach us that our lives are moving in the direction of our strongest thoughts, then we need to ask ourselves, do I like the direction my thoughts are taking me? If your answer is no, then maybe it's time to change your thinking. Maybe it's time to decide to change your mind so that God can change your life. If you're skeptical, that's okay. I get it. We've all tried unsuccessfully to change bad habits and force our runaway trains of thought back onto the right tracks. But this time, you're not alone. You're about to discover that God will team up with you to transform your thinking. With God's help, you can transform your mind. You can stop believing the lies that hold you back. You can end the vicious cycle of thoughts that are destructive to you and others. You can allow God to renew your mind by saturating you with His unchanging truth. That's day 1 of 7. Let's pray. Heavenly Father, thank you for guiding us toward what is true, noble, right, pure, lovely, admirable. Help us to think about such things and practice what we have learned from your word. Let your peace, which surpasses all understanding, guard our hearts and minds as we walk in obedience to you. May your presence be with us always, guiding us in truth and love. It's in Jesus' name we believe and pray, and everybody said, Amen. Amen, and happy Friday. Let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow's up 451 points, just over 1%. NASDAQ up 314, over 1.5%. S&P 500 up 70, well over 1%, almost 1.25%. And the Russell 2000, kind of bringing up the rear, up 12 points, only about half of 1%. In the Asian markets at the close, the Nikkei fell 121 points, the Shanghai rose 5, the Hang Seng gained 61. And in the European markets at the close, FTSE up 113. Now for the FTSE, that's well over 1.25%, almost 1.5%. The DAX up 242 points, almost 1.25%. And the CAC up 75, just shy of 1%. So that gave us a mixed day in Asia, only due to the Nikkei. It was a green day for the UK, and so far it is a big green Radio Friday here in the US of A. With that, let's go to the news. Jeff Bezos owned Blue Origin successfully launched its New Glenn rocket into orbit early yesterday on its first attempt, 25 years after the Amazon founder started the space company. The 320-foot rocket's payload, Blue Ring, is a spacecraft designed to move satellites to different orbits. The launch from Cape Canaveral demonstrated the company's viability amid years of industry dominance by Elon Musk's SpaceX and its workhorse Falcon 9 and Falcon Heavy rockets. The 7-engine, 2-stage, partially reusable New Glenn rocket is designed to launch spacecraft into orbit and is contracted with NASA to launch a lunar lander as part of the third Artemis mission in 2027. Up to 8 more New Glenn launches are anticipated this year. Elsewhere in space, astronaut Suni Williams, during her current mission, 7 months after being stranded on the International Space Station, following the malfunction of the Boeing Starliner vehicle. I'll be honest, I have no real desire personally to go to space or outer space or where man has never been before, whatever tagline you want to give it. But if I was going to, or if I was forced to, I think I would rather hitch a ride on something that didn't have Boeing's name on it. Now, I hate to throw shade at Boeing, but man, for the last few years, from DEI to doors flying off and horrific crashes and tragedies, this company just can't seem to catch a break. All right, Wall Street, U.S. stocks jumped today amid a tech stock revival as investors assessed a week of key data and earnings reports and eyed likely policy shifts under a Trump administration. Markets have turned upbeat as investors take stock of recent days' big bank earnings and inflation readings, which have resuscitated bets on interest rate cuts. Stocks are on track for big weekly gains after a major rally on Wednesday, while the 10-year Treasury yield pulled back to trade around 4.6% today. So what's Trump going to do on day one? Well, Donald and his allies are promising a blizzard of activity on January 20th, with a wave of executive orders to be signed within hours of his swearing in and more likely to follow in the days afterward. The president-elect and top aide, Stephen Miller, have separately said that once the dust settles, the total could be on the magnitude of 100 different executive actions. It's going to be immediate, Trump has said, of the effects, especially on the issue of immigration. For investors and business leaders trying to sift through the flurry, it's already clear how some of Trump's plans could affect certain industries or sectors of the economy. Energy, for example, is set for a keen day one focus with specific moves planned, but there remains significant uncertainty surrounding the exact direction Trump will take on other topics, especially the issue of tariffs. A wide array of other issues could also be addressed, from the federal workforce to crypto to student loans and more. Indeed, a blizzard it will be. Goldman Sachs handed its top two executives retention awards valued at $80 million each, and launched a program to give its leaders a slice of carried interest earned on private equity funds as it tries to compete on pay with top alternative asset managers. What a neat trick. If you work at Goldman Sachs and you say, I think I've had enough. I can only spend so much money in my lifetime. I think I'll retire. And so they say, well, maybe 80 million plus will keep you around for another couple years. I guess it's working. The retention awards are the second in just over 3 years given to Chief Executive Officer David Solomon and President John Waldron, who is also the Chief Operating Officer. They reflect the board's desire to retain the current CEO and COO as a senior leadership team, according to a filing Friday. I certainly have no doubt that these men are very well versed in the work that they do. But there's no one else on the planet capable of doing the job for less than an $80 billion bonus. Now, there's more to the story. Goldman also gave Solomon a $39 million pay package for 2024, a year in which the bank's profits surged while many Americans went hungry or had to decide between medication or gasoline. The award, disclosed in a filing on Friday today, is a 26% increase on Solomon's package for the previous year of $31 million. Goldman Sachs has aimed to compete more directly with private equity firms in attracting funds into its alternative assets unit, and has seen leaders of those buyout rivals, several of whom are Goldman alumni, receive long-term awards of a scale rarely seen in the banking sector. Now, they're called a bank, but the majority of their revenue is derived from trading. And on average, you know how many negative trading days they have over the course of a year? Since I've been tracking it, somewhere between 3 and 5 days out of an entire year. Huh. Guess they know something we don't, right? President-elect Donald Trump is reportedly mulling unconventional ways to save TikTok from an impending U.S. ban, including an executive order that would push out enforcement of the new law by months. But doing so could mean contravening federal law, heightening the danger that such a rescue could face serious legal hurdles. An executive order offers Trump only a narrow chance of securing TikTok's survival, according to constitutional scholar and Kent Law School professor Mark Rosen. Mark said, under current Supreme Court precedent, an executive order is on very shaky ground. The Supreme Court is set to rule on TikTok's future in the U.S. by January 19th. That would be Sunday. The executive order, considered by Trump, as reported first by the Washington Post and confirmed by other media outlets, would suspend enforcement of the TikTok law for 60 to 90 days. And while Elon would like to buy it, I think we run into a antitrust issue there. It's like you can't own every newspaper in the country because it gives one person too much power. One person can't own all the TV stations or all the radio stations. And arguably, Facebook, and TikTok are the big three. And I think TikTok is probably in the number one spot, especially with younger people. Now, U.S. President-elect, still got to say elect for a couple more days, said today the decision on the future of the TikTok app will be up to him, but he did not provide any detail about what steps he would take. It ultimately goes up to me, so you're going to see what I'm going to do, Trump said in an interview with CNN. Congress has given me the decision, so I'll be making the decision. Should be interesting. And last from Bloomberg, oil headed for the fourth straight weekly gain as U.S. sanctions posed growing risks to global supply, with the market already tightened by cold weather. West Texas Intermediate was up about 2% for the week, even after edging lower to trade near $78 a barrel today. The Biden administration's harshest ever curbs on Russian oil have shaken up markets, with freight costs rocketing and long-standing buyers of the country's crude, including China and India, looking elsewhere for supplies. So there you have it. That's the big news. Let's bring it home. Logic 247. That's our 24/7 around-the-clock E-mini alert service. It's not just E-minis. It's also crude, gold, euro. No, we dropped the euro. Bonds, silver. Over the last 337 weeks, we've issued over 18,800 individual handcrafted alerts. In fact, next week we'll hit 18,900, I believe. What we've averaged over all those weeks and all those alerts, we've averaged being stopped out 20% or less of the time based on market structure and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Valerie did this recap at 8 a.m. Eastern this morning, so some things have probably changed since then. I haven't put out any additional alerts today. So since the market opened this past Sunday night at 6 p.m. Eastern, we did issue a total of 40 alerts. At the time Valerie did the recap, we were still awaiting the outcome of 10. So that gave us 30 actionable alerts, of which 2 or 7% would have been stopped out, again, based on market structure. And that simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, yes, you can trade them, but that's not the purpose of the logic alerts. The purpose of the logic alerts is to teach you, hopefully, to learn how to read a chart. The first time you look at a chart, it seems quite a bit chaotic. No rhyme or reason, just jumping around all over the place. But there is rhyme, there is reason. You simply have to learn how to understand the flow of price. And you want to get to the point where you can look at any chart of any market, futures, stocks, crypto, Forex, ETFs, and along with our humble set of indicators, you should be able to instinctively see what the next high probability move is. That's the purpose of the alerts. The fact that you can also trade them, that's just gravy. You need to be able to spot, whether you're looking at a daily chart or a 1-minute chart, you need to be able to spot where the market is most likely to encounter resistance or support, and then identify the windows of opportunity that lie in between. Each logic alert has an entry price, an initial target, additional targets, and then a final trade to target. The logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. Our original alert service, long before we had Logic 247, the concierge trade alerts, they're a bit different. Different how? Well, number one, they don't come out around the clock. They're published as a static report shortly before the Globex open or shortly after the Globex open. Now, I've been on a pretty good run of getting them out 5 minutes before the open over the past month, but there have been a few days, like Sunday night, as you can see. But anyway, point is I try to get them out 5 minutes before the open, but sometimes life gets in the way, and I'm not able to get them out until after the open. And on those days, either way, I notify you in the Telegram discussion group whether or not you should be ready for them to come out at 5:55 p.m. or not. So last night, all of our members, all of our trial members, had every one of these targets 20 minutes after the market opened. Bonds, silver, gold, the NQ, crude oil, the Russell, the Dow, the ES. Now, if you're a member or trial member, make sure you read this information up here. It's very important. And if there's anything you don't understand, simply ask, and I'll be happy to answer it for you. Okay? So again, 20 minutes after the 6 p.m. Eastern open last night, all of our members and all of our trial members had all of these targets. So let's go to the daily chart. And I have to put you on hold for 1 second. Guys, it's going to be more than just a second, but I'll stick around. I'll be right back. And of course, Michael will be joining us in a few minutes for a recap of what happened in the live trading room this morning. And we'll do some live trading on the TradingView platform. So I'll get this taken care of as quick as I can. Be right back. Okay, sorry about that. It took a little longer than expected. Last night in the members only workshop, we discussed the fact that red and falling had turned to blue and climbing. I was just getting ready to change the fib extensions, but I said I'm going to wait a day because I got a feeling we might break through this trend line, and we have. And we found resistance right at the 38% fib extension. So we've got a long weekend. I'll redo this chart before the broadcast on Tuesday. This is a powerful move up. These are not normal market conditions. See, we're in an uptrend for quite a long time. Leg retracement, leg retracement, leg retracement, leg retracement, leg retracement. Then we put in our all-time historic high back on December 6th at 61.7875. It appeared that we had gone from an uptrend to a downtrend because we started building legs in the opposite direction. Leg retracement, leg retracement, leg, and this retracement. See, the pullback to the BBC holds more often than it doesn't, but we know eventually it will trade through. And so after 1, 2, well, actually 3, 1, 2, 3 legs to the downside, it looks like we just may return to the uptrend. Expect a lot of volatility between now and probably through the end of the month as President Trump takes office and his cabinet members are confirmed, and we're going to see what the new normal looks like. But as you can see, when red and falling turns to blue and climbing, what do we typically get? Higher prices. Red and falling turns to blue and climbing, higher prices. There it is again. There it is again. And the opposite is true of when blue and climbing turns to red and falling. So last night when the markets opened, we had blue. So that made me put a halt to changing these just now. I still may readjust them. We'll see how we end up closing today. This is a very bullish move, but will the institutional traders be willing to take those positions home over a long weekend? What I'm saying is this candle is still touching the green line, the BBC. And so will we close the session today ahead of the long weekend above the BBC? Or as we go into the close today, will we see the institutional traders unwind their positions and send price back down to the BBC, leaving a long wick in its wake? That's one possibility. The other possibility is that we continue higher. So we got to start looking left for where our next obstacles are. It would be the high of January 6th. And we've got this high right here from December 27th. And then that puts us all the way up here to the high of December 18th, which puts us very close to the all-time historic high. The green line is called the BBC. It just stands for bull bear cross. When price crosses above the green line, we anticipate higher prices. When price crosses below the green line, we anticipate lower prices. And that repeats itself again and again and again. So today's close, based on this, I think there's a good possibility or probability that we'll see continued strength. We've got the inauguration coming. We've got day one, all those executive orders. Sit tight till the dust settles. And keep in mind that the institutional traders, the ones who actually move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. And it is the institutional traders who actually move price because of their account size and the size that they trade in. So, the alerts themselves are created on the 30-minute chart. Nothing magic about 30 minutes. It's just the time frame I chose years ago. And they say if it's not broke, don't fix it. This was the opening candle last night. These vertical lines separate today, Friday, from Thursday. Back here's Wednesday. When price rallies up to a weekly trading zone, we expect resistance until proven otherwise. When price drops to a weekly trading zone, we expect support until proven otherwise. 70% of the time when price encounters a weekly zone, you're going to get consolidation. It can look like this, it can look like this, this. 20% of the time rejection, 10% of the time the slice. Now the zones are published Monday morning at 6:15 a.m. Eastern. The highest zone this week for the ES is way up at 61.81. So I don't think we're going to see that today, but keep it in mind because the Globex markets will open Sunday night at 6 p.m. Eastern. So from here, we hit the BBC resistance, which sent us back to blue and climbing support. So we got a leg, we got a retracement, we got another leg that took us to and through the target, and we're just off the high of the day, 60.49. We're right at the high of the day. Well, the high of this candle right here. We got a little double top going. So it won't take much to send this thing to a new high on the session. On the Dow, it looks pretty similar. Here's where we opened. We got above the VBC along with the help of blue and climbing, and we got a leg, we got a retracement, we hit our target, and the highest weekly zone this week probably won't be reached considering how much we're already up today. On the Russell, we opened right at a weekly trading zone. We stayed above the BBC, took us right up to the long target. And right here, this doji may signal the high of the session because we've pulled back to the BBC, but we've run into resistance at red and falling. Now this high right here today is 2307 half. Then if we go back to Wednesday, 2303 half. So we've taken it out by about 4 points. But we're running into resistance here. That may send us below the BBC back to the support area that we saw at the open last night. On the NQ, we had a slightly higher gap open, which filled in that first 30-minute candle. And we rallied up to the zone, consolidated, continued to the BBC resistance, which sent us back to the zone support. That support sent us to resistance at the target. That resistance sent us back to support at the BBC. Remember, the pullback holds more often than not. Whether you're pulling up from below, like that, or pulling down from above. The pullback holds more often than not, but eventually it will trade through, as we saw right here. Crude oil down a little bit today, over the last couple days actually. You know, President Trump has promised drill baby drill, so the market is anticipating additional supply. We opened, we had blue and climbing below us. Remember, when red and falling turns to blue and climbing, we anticipate higher prices. And we got them right up to this spot. The market found resistance at that level, sent us back to the BBC, support, back to resistance. Then red and falling crossed the BBC. That's a bearish cross. So the red line gets below the green line. That sent us down to the short target and to the zone. Now, we've published the zones every week for the past 15 plus years. This past December marked 15 years. And they've served us quite well. As you can see, when price goes up to a zone, we expect resistance. When it drops to a zone, we expect support. And once they are published Monday morning at 6:15 a.m. Eastern, they do not change in any way whatsoever. They're carved in stone. So right now, price is a bit trapped. You got red and falling directly below price. You got the BBC directly above price. So we could go sideways into the close, or if we overcome the BBC, then you want to be very cognizant of this area right here where we had the bearish cross. When you have a bearish cross that leads to an extended move like this, the first time price revisits that area will almost always be good resistance. Now that's a bearish cross. Bullish cross, same thing. Okay, Michael is here, so we'll pick up with gold when I come back. Michael's going to give us a recap of what happened in the live trading room this morning. We'll do some live trading on TradingView. Then I'll finish up the recap of the alerts and close out with our good word for the day and for the week.
Excellent. Here we go. I have another meeting scheduled for 2 o'clock after 2 using this room. I think so you have another half hour after if you want.
Yeah, it shouldn't take me very long.
Yeah, I figured half hour would probably be good.
Okay,
All
screens look good.
Excellent. Here we go. Good afternoon, everyone. Today is Friday, the 17th day of January 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple link right here. There's no credit card required for the trial. Just click on that purple link. And when you do, you're going to be brought to, hang on, is this a new registration? Yeah, you're going to be brought to this registration page right here. Okay, and on this page, all we ask for is your name, your email, your phone number. Give us your, I fill out 5 multiple choice questions. Fill them out, and then down at the bottom, we ask for your NinjaTrader ID if you have one. Only if you're going to be using Ninja Charts. So if you're not going to be using Ninja Charts, then we don't need the Ninja ID. And your TradingView login ID. Now, the TradingView login ID is pretty important because the main indicators that we use are on TradingView, only on TradingView. Okay, so I'll show you how to get that. If you don't have that, all you need to do is go to mytradingiq.com, click on Trading Platforms, scroll down to here, it says TradingView Platform. You can watch the video if you want, but really just click on this link right here. That link will bring you to this page. On this page, click non-professional, click monthly. You get a 30-day free trial of TradingView. Okay, you're gonna have to choose one of these. The Essential will work for you if you're only using 2 charts. The Plus will work if you're using 4. All right, it's free for a month either way, but it's only $29 max if you're not. If you go over the month, the one thing you're gonna have to do though is get real-time data. All right, you're gonna need to get real-time data. And I'll show you how to do that in just a moment here. To get your real-time data, let me save this. To get your real-time data, you need to go here, then go here and go to account and billing. Now, I just did this with another, and mine comes up like this. It says get real-time data, but sometimes it doesn't say it like that. sometimes it'll come up and say, it'll have one little black thing down here. The background will look completely different. It'll have one little black thing that says, get real-time data or get data or something like that. And you're gonna have to click on that. The one that you need to get is, where is it? It's not there. Okay, if I click on get real-time data, then it'll be there. If I get real-time data, the one that you need to get is not the stock bundle. You need to get the futures bundle. This one right here is what you need to get. CME Group, Emini included. CME, CBOT, Comics, NYMEX is $7 a month. All right, that's the one that you need to get. So go in there and grab that. Once you do that, you will have real-time data. You will be able to tell because up here at the top of the chart, you'll have a green thing right there that says the market is open and you do not have a little orange D. If you have a little orange D up there, that means you have delayed data, okay? All right, let's get into what we did today. Now, if you're gonna read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. We had a pretty good day today again. It wasn't as good as a couple days ago. The NQ wasn't hitting again today. I think when the markets are trending, the NQ doesn't do as well. Well, at least not in the time frame that we were looking at, right? I did jump out because one of our guys said to look at the 100 range, and he was doing well with the 100 range, and I did jump out to look at that, and did do well with the 100 range, but it wasn't doing so well on the 50. But anyway, today, the 17th day of January 2025, we're up 74 ticks on the NQ, 41 ticks on the Russell, 19 ticks on gold, and 58 ticks on the ES. That put us at $1,490 per contract this morning session. 3 days in a row, one trade, 1 minute, getting the goal for the day. 3 days in a row. I'm telling you, starting at 9:27 works. We're at $1,125 when we got the goal for the day this morning with 10 contracts on, and we took a total of 38 trades. So on the month now, we're at $20,880. We are halfway through the month right now. We're going to be 1 day over halfway through the month right now. And we're at $20,880 with one contract. That is unheard of. We've never done that before. We're 11 trading days, averaging $1,898 per contract per morning session. On the year, well, on the year now, we're at 18,000. Actually, that's not right. Why is that not? That didn't carry down right. On the year, we're at the same thing, $20,880. With the 10 contracts now, we're at $208,800 already this year. But with one contract, $20,880. All right, and these are the same numbers that carry down to here. I don't know why they didn't carry down properly, but I did figure this out today. So far this year, we're up $1,977 with one contract quitting when we get the goal for the day. All right, it is this number right here divided by 10. $1,977 with one contract quitting when we get the goal for the day. And it's taken us 41 minutes to do that. So if you get out the calculator here, this fancy calculator, we are making, what is it? $48.21 a minute is what we're averaging right now. And so if you multiply that times 60, we're at $2,893 per hour right now, so far in the year. All right, $2,893 per hour. Not too bad if you can get it. All right, so let's get into the trades. We didn't have as many trades as yesterday, so we can cover a little bit more. The gold was one we had the least amount of trades on. We ended up with plus 19 on gold. I missed a bunch of trades today on gold. I was really close to getting in them a couple of times, but I just didn't get filled. All right, so our first trade on gold here, we picked up 1 tick. And the next trade over here, we picked up another tick. And then we picked up 5 ticks to get us to 7. And then we picked another 5 ticks to get us to 12. And then toward the end of it here, we picked up another 9 ticks. I think it might have been right here. We picked up another 9 ticks to get us to 17 on the gold. Okay, we got us to 17. These red lines here are the ones that I missed. You can see I missed a short right there. That would have been great. There was a long right here that would have worked out too if I'd have taken it, but that would have been mixed in with the short right there probably. I missed a short right there that would have worked out enough. I missed a long right here that would have worked out well. I missed a long right here that would have worked out well. I missed a long right there that would have worked out well. And that was it. During the break, there was one long right here from the open of this bar. The open of this bar that would have worked out. There was a short right here on the open of that bar. That would have stopped you out. It would have come back pretty close to break even, but it didn't get down there. There was a long right here that also would have, if you got it right there, it depends where you entered in. 57.6, did it go 5 ticks into profit? Yeah, it went 6 ticks into profit. If you got the exact entry, it went 6 ticks into profit. If you didn't, it went 5 ticks into profit. Stop should have gone to break even. The next one was right here. You would have shorted that. That would have kept you in the trade with a move down. There was a long right here. You would have gone long right up here. That would have stopped you up. Short right there would have been okay. A long right here would have been okay. A long right here would have been okay, followed up by the short right there, which would have just given you a bunch of money. And that was it on the gold today. Okay. Now, I'm going to throw one thing up here for you guys. If you didn't make it to the partners meeting or you were not there this morning, I added something to the context in the context PP last night. It goes way back to 2010 or something like that. I put the YBR in here. Right. The reason I put the YBR in here is because some people are having trouble getting it together with the divergence trade. So with the YBR in there, you don't need to have the divergence. All right. There's 2 different ways you can trade this with the YBR in there. For anybody that's in here right now that wasn't in there this morning or in there last night. 2 different ways you can work with this. Okay. You can use it if you're above the YBR. You can buy as soon as it goes into the oversold. So you'd buy the open of that bar. Well, it'd be all these things right here. You'd be buying every one of those things. Well, actually, you'd be buying every one. You'd be buying all the ones from down here at the bottom. You'd be buying that one, 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 that one. You'd only be buying right in here, okay? It's sort of moving along with the trend more than going counter trend trades, right? So you'd be buying when it goes into the oversold. Be buying on that bar right there. 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 That bar. Well, I'm sorry. Be buying on that bar right there. Be buying on that bar right there. Buying on that bar. And that's how it would be working. Okay. Now, that's if you want to be aggressive. If you want to wait for it to go back with the trend, then the same bars, the same ones going in the same direction. If you're above the YBR, you're going long. The same bars when it comes out of the oversold. You could buy when it comes out of the oversold. Okay, so you're not buying on the open of the bar that's highlighted. You're buying on the close of the bar that's highlighted. All right, you're not buying at the open. You're not selling at the open. You're selling at the close. So you see the difference is you're missing a whole bar length to get some sort of confirmation that you may or may not need. It's up to you how you want to play it. It's totally up to you. Like right over here, right here, we're in the overbought, so you could sell it. You could have sold it right here at the open. This bar right here, you could have sold it right here at the open, or you can wait for it to close all the way down and come out of the overbought. Okay, this last one right here, right here, we went up into the overbought. You could have sold the open of that bar, or you could wait and sold the close of that bar. Right, it's up to you. If you feel that you need that confirmation, and that confirmation is going to skip these flat spots most of the time. It's going to skip these flat spots because you'll be going when it comes out of the overbought, or at least when it closes down. This one didn't come out of the overbought, but it goes down. So you would have been able, this would have been actually the same thing. You would have, instead of selling the open right here, you would have sold the close right there, and they're in the same spot. So it doesn't really matter in that case. But this one right here, you would have sold it right here at the top of that bar, as opposed to selling it right here at the bottom of the bar where it just came out of the oversold. The overbought. Okay. Good stuff for you guys. Everybody has access to the context and context PP. Everybody that's a partner. Everybody that's paid. It's not just, I put it in both the context and the context PP. It's not just passport people. Okay. But you do need to be passport to get that. Or sign up for that by itself. All right. So that was gold today. I'm sorry, I went way off on the tangent on that thing. Let's show you the Russell. We had a little bit of back and forth here on the Russell, as you can see, but the Russell was in kind of a zone here where it wasn't trending very strongly, and those are usually good opportunities for us. So our first trade on the Russell here, we picked up 5 ticks. Then the next trade we stopped out on, so we're at minus 20 right there. The next trade, we've got a break even there. Then we picked up 20 there to get us back to 0. Then we had a break even. Then, hang on. I don't have that second stop out in there. I don't think that's supposed to be a stop out. I think that's a green one. A blue one, sorry, a blue one. Because we went from 0 to 11. Right. We were back at 0 after this, then we went to 11. Then we went to 21. Then we went to 31, and then we went to 41 at the end. This was where we went to 41 on this one. But those were the trades, and these are the trades that we missed. There was a long trade, not from there. It would have been from that bar right there. A long trade on that bar right there. A long trade on this bar right here. That probably would have been a stop out. Might have gotten your break even, but probably would have been a stop out. A short trade from here. That worked. A short trade from, nope, that's a long trade. Sorry, this would be a long trade from here. And that again might have gotten you to break even. I don't know for sure. If you throw the YBR on there, oops, not that. The YBR on there. Let me see if I have that just set up on this. Yeah, I do. Okay. If you throw that on there, you would have only been taking short trades in this set right here. You've been selling the open of the close of that bar or the open of that, either the open or the close of this bar right here. All right. Now you're not using the slingshot when it's like this. So you'd either be selling the open of this bar, or the close of that bar. All right. The open of that bar would have gotten you in a better place. The next one right here, you'd be selling either the open of that bar or the close of that bar. So the open didn't really give you that much of an advantage on that one. And over here, you would be selling either the open of this bar or the close of this bar. Okay, so they end up being in the same place, except this one wouldn't pull back so much. Okay, are you seeing that? So the difference when you're using the YBR is you're not trading any of the counter trend trades. You're only trading with the things that are under the YBR. The YBR determining what your trend is. Okay. So that was what we ended up with on the NQ. We ended up with close 41 ticks. Okay. And we'll get to the ES. The ES was our big winner today, I think. Yeah, it was. Well, we had 74 on the NQ, but dollar and cents, I think. The ES, we had 58 ticks on the ES. So 58 times 12.5 is more than 74 times 5. Significantly more. On the ES today, let's see. The ES was trading pretty well again. It was trading pretty well again. Let's go all the way back to the beginning. Right, I screwed up on the ES in there, you can see. Our first trade on the ES was right here. That's where we got the goal for the day. We picked up 9 ticks on that one, the very first trade. The next trade was right here. We picked up 16 ticks on that to get us to 25. Then we missed a couple of trades in here. That would have been a long trade, would have worked out. That would have been a short trade, would have worked out. This was a break even. Then I stopped out on this one. I screwed that one up because I shouldn't have gotten into it. But we went from 9 to 25 to 33. There's a trade missing in here. Went to 33, and then we stopped out and we went down to 23. Then we went back to 35. And then we went from 35 to 36, and we had a break even. We went from 36 to 38. And went from 38 to 43. We had a break even. We went from 43 to 53, then 53 to 67. And then we stopped out, brought us down to 57, and then we went to 58 right there. And that is where we ended it with the ES. Now, Jill, are you in here right now? Any chance? No, she's okay. That is the next meeting that's coming up. It's 1:17. So we throw the YBR in here. We'll just take a quick look at that. And so you'd only been taking long trades through here, and only when it came out of the oversold, or it went into or came out of the oversold. So this bar right here would be a trade. This bar right here would be a trade. This bar right here would be a trade. All right, well, this one would be the trade if you waited for it. This bar right here would be a trade if you bought when it went into the oversold. Otherwise, this bar right here would be a trade if you waited for it to come out. This bar right here would be a trade either way. This bar right here would be a trade either way. No, this would be the one if it came out. So you'd be selling right, you'd be buying right there or buying right there, one or the other, right? This bar right here would be a trade. So you'd be buying down here at the bottom, or you'd be buying up here at the top. Okay, this bar right here would be a trade. So you'd be buying down here at the bottom, or buying up here at the top. This bar, you'd be buying right here in the middle, or buying up at the top. Okay, those are the options. This one right here, you would be buying right here, the middle, or buying up at the top. This one right here. Now with this one, if you're just waiting for it to go into the oversold, you know, when it goes into the oversold, you want to see this go all the way up into the other level from oversold to overbought before you trade in that direction again. But if you didn't do that, you would have bought right here, and it's the ES had to go 4 ticks into profit. It looks like you would have had to have exactly the right fills. Maybe, no, maybe not even then. No, if you didn't, no, that would have stopped out. But if you waited for it to come out of the oversold, you would have bought the close of this bar. Now that would have been just about the same thing. 42 up to 43. So you might have been able to get your stop to break even on that one. This, you would have bought the open or the close. And this right over here, you would have bought the open of this bar or the close of that bar. You guys see all that? You see what I'm doing? I don't want to have to do this for every single bar, but that's how it worked out. Yes, we ended up with plus 58 ticks. Okay, on the NQ, you can see there were a lot of trades on the NQ here. We had a series there where it wasn't doing so well. But on the NQ, our very first trade on the NQ was right here. We picked up 30 ticks on that. The next one was here. We picked up another 32, got us up to 62. Then we had a break even and we got up to 98. Then we went to 114 and then the wheels fell off for a minute there. We stopped out minus 60, went down to 54. Then we got a little bit of a gain there, 12 ticks, I think, got us up to 66. Then we stopped out again. That got us down to 6. Then I missed all these trades because I said, you know, the ES swings are too big right now for the divergence trades. At least in this time frame, they're too big for the divergence trades in this time frame. And so I stopped looking at it for a few minutes. And while I stopped looking at it, there was a long trade right here that would have worked. There was a short trade right here that would have worked. There was a short trade right here that would have stopped out. There was a long trade right here. That should be over 1 bar right there that would have worked. A short trade right here that would have worked, and a long trade right here that would have worked. So 1, 2, 3, 4, 5, 6 trades, and one of those would have stopped out, and 5 of those would have been profitable when I stopped looking at it. Anyway, at this point, I believe we had gotten, after the 2 stop outs on the NQ, we were down to 6, is that right? I think something like that. From 42 to 46 to 66 to 78. Yeah, 42 to 6 to 42, then to 46, then to 40, and then to 66, then to 78, and then we stopped out again and went down to 18. Then we had a pretty good trade right there that got us up to 66, and then a break even, and another one there that got us to 74. And that was it for the morning session. That was a lot of trading for that little amount, it seemed like. I'm not going to go through every trade if we throw the YBR in here, but and did I have it right with this one? Nope, I guess I didn't have it with either one. So to put the YBR on it again, you just put on, you got to put a new context PP or a new context on there. Take off those and just put the YBR. Okay. So in this case, you would have only been taking long trades. Things coming out of the oversold or going into the oversold. Only long trades when you're above it right there. Okay, so that would have won, that would have won, that would have won. Now, if you're waiting for it to come out, that might not have right there if you're waiting for it to come out. But if you're taking it when it goes in, then you would have a trade there. This one would have won both ways. This one would have won both ways. This one right here, it would have stopped you out if you waited for it to, if you just took it on the way in. And if you waited for it to come out, you would have had a win right there. This one right here would have stopped you out unless you waited for the win. If you waited, if you waited for it to come out, it would have had a trade right there. Would have been okay. This one here would have, this one, if you, even this one didn't matter either way because it never went above the entry point right here. So you would have been almost on that one. Either way, that would have stopped you out. That was it. The NQ was kind of tough to trade today. It wasn't as easy as it normally is. And when it trends, it doesn't trade as well when it's trending, when using divergence trades. But if you're not using divergence trades and using these trades, waiting for it to come onto the overbought or oversold, then you should have plenty of opportunity to get your money in there. All right. So for anybody watching on YouTube, if you haven't taken the free trial, go here to mytradingiq.com, click on the purple button. There's no credit card required. Click that purple button. It's going to bring you to this registration page. Just fill it out. When you fill it out, we'll know you took the trial. We'll send you all the information you need to get your indicators indicating in front of you and to get into the room with us in the morning. Okay. All right. Now, we have the gold. We're just about to get into the overbought. Didn't quite make it. If I put the slingshot back on there, we didn't end up being a trade either way. The ES, we got into the overbought. If I put the slingshot back on there, we had some divergence, so we could have sold the open of that bar. It's too late to do now, but we could have sold the open of that bar. Okay. Over here, put the slingshot back on here. We missed that trade there, and we don't have another one. And over here, put the slingshot back on here. We don't have another one. Okay. All right. So, questions? Anybody? Anybody? I am here to answer your questions if you have any. All right. No questions. So I'll just wait until we get a trade set up. It looks like gold might give us one. If we get a down close over here on gold, we're going to have a long trade. Okay, well, it didn't work out the way we wanted it to. It didn't give us the trade right here. Even on the down close, it went sideways. I thought it was going to go down. So we have to wait. Let's go look at other stuff. Let's go all the way out here and look at other stuff. Okay, so Bitcoin, I got an alert today that was up 5% today. 5%. It's on a tear. Silver, I haven't really looked at in a while. Yeah, this is leading it. Silver, we had a short right back here a few minutes ago on the silver from the open of that bar right there. That was a really nice trade on silver. The open of that bar was up here at 31,205, and that is 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 ticks in silver. That's a significant amount. I don't know exactly what that is, but I think it's about $600, something like that. And that's what silver did. And the next one over is the YM, and that
2
just
pennies is
right.
$100.
2 pennies is 100.
Yeah.
Okay, so it went
4 ticks to a penny.
4 ticks to a penny.
2 ticks to a
So
penny.
it is it
Yeah, it's $25.
3 ticks to a penny. Oh, okay. All right. Well, then it went 15 ticks, so it was about $400, just about $400. That was pretty good indication. This is just playing YBR. I'm just playing TV trades on the YM. Sorry. And both of those trades worked out. There were only a couple of them, but they both worked out. What range is this on? 19 range. That wasn't even today. When the Z I was on the Z contract. Yeah, that's okay. So there are no trades there on that one. Let's put this on the leading contract and see what happened today. All right, so today was kind of bullish. It was a few trades, one there, one there, one there, and one there. 4 trades, and they looked up. That looked pretty good. That was 6. Let's go to 7. What's on 7? Oh, 7 was YM. Okay, so 8, I guess, is XRP. Oops, didn't do that. Right, XRP, here it is. Now, it's on a daily, but let's break that down to something smaller, like a quarter. Or let's go to a 20 range. Okay, double click on that and get rid of this. There. So on the 20 range, it's suggesting it's going to go down from where it is right now. And there it goes. Okay, but it was up here at 320. And so the days range on this has been, oh, it's had a lot of range today. Let's go to a larger one. There you go. All right, so the days range has been, well, let's just say the New York Open, right? From here, around 9:30, all the way down to here, back up to here, and all the way back down to here. So it's at kind of a double bottom right here where it's at. And if it does not put in a lower swing here, if it does not put in a lower swing here, then we'd be looking for it to start moving up and change direction. That's what it looks like to me. Now, you know, this is, the XRP is moving around on fundamental data, not really technical data so much. And there's all kinds of things that are supposed to be coming to life with XRP. And we'll see if they do. All right, so while I was doing that, there was a short here on the Russell that I didn't see. And that was it. All right. All right. Well, we don't have any trades. Are there any questions? No questions?
Nothing on YouTube. So if you want to wrap it, go ahead.
All right. Well, then we can do it, I guess. I'll go back here and say on the session today, we were up $1,490 per contract. Took 1 minute and 1 trade to get the bull for the day. Again, $1,125. And we took a total of 38 trades this morning. So on the month, right now, halfway through the month, we're at $20,880 per contract. That is just unheard of. Averaging $1,898 per contract per 2-hour morning session. And I am doing a lot more trading in the mornings right now. I don't really have my lesson plan put together for this yet. So I am doing a lot more trading, more than 2 hours of trading than training right now. That said, if you haven't taken a free trial, go here to mytradingiq.com and click on the purple button right here. Right? If you click on that purple button, it's going to bring you to this registration page. Just fill it out. Give us your TradingView login ID. If you don't have one, get one. Right? It's free to get one. If you want to get real-time data, that's going to cost $7 a month, but get one of those. All right? No credit card is required for the trial. And that is it. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne is ready.
Yep. Recap of the morning session.
Today it took 1 minute and 1 trade to get to $1,125 with 10 contracts.
Good job.
Thank you.
All right, guys. We left off on gold, and this was the open. We consolidated along the BBC for quite a few hours. Blue and climbing turned to red and falling right here, and that took us all the way down to the target, through the target, We even spiked the zone and we came right down to this area here. Okay, just look left and you know that you should be expecting potential support in that area. Okay, look at this climb that gold has had. Leg, retracement, leg, retracement, leg, retracement, leg. And then we had a little bit deeper retracement today. And then a leg that took out yesterday's high. Yesterday's high was 2757.9. Today, 2759.2. Must have had it on the wrong one. So it's showing it yesterday's high as 20, something's amiss. 2757.9. 2759.2. Something's not right. Let's switch our time frames. Refresh the chart. See, yesterday's high was oh. If you look at the horizontal line on the cursor, you can see that we had a higher high today. So 57.9. 59.2. That was me. Brain cramp. Okay. So the step line is crossing blue and climbing. That typically sends price back to the BBC. We know that the pullback holds more often than it doesn't, but eventually it'll trade through, okay, as it did there and there. And when it traded back through there, the pullback held. And that sent us all the way up to the long target and to the zone at 2757/58. So we've gone from zone to zone, from 35 to 57. That's, oh, let's see, from 35 to 57, that's $2,200 per contract traded from zone to zone. It's a pretty eventful day. So, as we approach the BBC, now this candle just opened, so you got to exercise some patience and see whether or not the pullback's going to hold. If it does, then we expect another leg to the upside. In the event we trade through the BBC, and right here where you have the bullish cross, you would expect that to be good support, at least the first time down. So when the blue line gets above the green line, that's called a bullish cross right there. And that's pretty reliable. 100% of the time? No. More often than not? Oh yeah. Silver. Here's where we opened last night. We hit red and falling, and when red and falling gets directly below price, it can become support. That sent us, you'll notice, red and falling turned to blue and climbing. That sent us up to resistance at the BBC. The pullback held. And then we got a leg, a retracement, and a leg that sent us to the target. And then we spiked the zone. This low on Wednesday, right here. This low equates this low. Support sends the market looking for resistance, which it found at the BBC. Again, the pullback holds more often than not. So we get a big leg to the downside, and then a bounce. Pullback held. Sent us down. Red and falling was below price. Okay. And when red gets below price, it's usually on its way to becoming blue and climbing. Send us back to the BBC for resistance. Now this is an area for potential support. Okay. You can see right here where the step line crossed red and falling, turning it to blue and climbing. That's a very important price, important area. So does this have the potential to change the direction of silver for the day? It does. But it looks pretty heavy. So what could happen now that blue and climbing is getting directly above price, it could be on its way to turning back to red and falling, which would send us down to challenge the lows of the day. Both gold and silver have been very active as of late. And we're creeping above that 38% fib extension, attempting to. Got a little bitty wick sticking above it. Just look left for the areas where you should anticipate resistance. This high right here. And you got your 50% fib extension. And then you've got this little double top right here. It's potential resistance. Then you got the 62. And if we extend this trend line out, that would, this is the all-time historic high right here. So again, you gotta really wait, and I'm talking bigger picture. And I'm not talking about a 60-second trade. I'm talking about bigger picture. It's really important where price closes today. But every example I showed you today, when red and falling turns to blue and climbing, we get higher prices. And we've gotten higher prices. Question is will we get even higher prices? Or will it roll over? Okay, because this is the daily chart. I suspect we may continue to climb. There's a lot of exuberance heading into the inauguration of the new cabinet and all the executive orders on day one. Yeah, give it a week or so, at least through the end of the month, to let the dust settle, and we'll see what the institutional traders really think about the future of the market. Okay. To become a member, send an email to support@cfrn.net. In the subject line, just put "I want to become a member." In the body of the email, put your name, put your phone number. We're not going to call you, but we will send you an email that explains exactly what becoming a member means. And there will be a link you can click if you decide what we do is right for you. As a passport holder, you get 2 hours of live training in an interactive environment every trading day and live markets. Along with the 2 hours of live training every day, you get private one-on-one mentoring, no extra charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, it doesn't matter because price flows are the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. And that's the importance of learning how to read the chart so that you know where to expect potential resistance, where you should expect potential support. This allows you to clearly see the windows of opportunity that exist in between those points. As a passport holder, you also get the Logic 247 alerts around the clock. You get the concierge trade alerts every evening the second they're published, whether it's 5 minutes before the open or after the open. Every Monday morning at 6:15 a.m. Eastern, you'll get the weekly trading zones for the week. Once they're published, they're carved in stone for the entire week. They don't change. And you're able to attend the members-only workshop every Thursday night. Plus, you get around-the-clock support via Telegram. Then you get the golden key that unlocks all the private channels in Telegram. We have public channels, we have private channels, but as a passport holder, you got access to everything. And again, just send that email to support@cfrn.net and tell us you want to become a member. All right, let's wrap it up with a good word for the day. Yesterday, we talked about what it means to love someone. Today, we're going to talk about not being afraid of getting old. Part 1. Isaiah 65:22. My chosen ones will long enjoy the work of their hands. We live in a fickle society where a few wrinkles can devastate our self-worth. But we don't have to be victims of that value system. For as the days of a tree, so will be the days of my people. My chosen ones will long enjoy the work of their hands. Someone said, age is an issue of mind over matter. If you don't mind, it doesn't matter. So, here's some steps. Number 1, build a strong relationship with God. Spend time talking with Him and reading His words. Proverbs 3:1. Store my commands in your heart. If you do this, you will live many years, and your life will be satisfying. Number 2, come to grips with the reality of aging. Face it, you've been aging from the moment you were conceived. In fact, on the day of your birth, you were already 9 months old. Therefore, fretting about getting older is as fruitless as worrying about the sun going down each day. Instead of worrying about the length of your life, maximize every day of it. Each morning, look in the mirror and announce, this is the day the Lord has made. I will rejoice and be glad in it. Psalm 118:24. And number 3, always have a goal. It doesn't have to be something big in the eyes of the world, just something to look forward to, doing with your hands and your mind. Eleanor Roosevelt said, I could not at any age be content to take my place in a corner by the fireside and simply just look on. Read, grow, contribute, stay involved, live your life until your last breath. And that's our good word for the day and for the week. A reminder, Monday is a holiday. And I just saw a headline that the inauguration has been moved inside. Now, I don't know if it's due to the extreme weather or the potential for some terrorist activity, or maybe a combination of the two. But it makes sense to me. So, we will be back on Tuesday for a full day. Thanks so much for tuning in today. Whoever you are, wherever you are, May God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.